Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Excuse me, before I go any further, I need to go through the disclosures. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. As a reminder, the focus of my presentation and the focus of the Options-Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. And I have a two-step process for trading, and the first is planning, and I use positional analysis, and I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups, entries, and exits. And questions and comments are welcome. On topic questions and comments. Again, remember we're talking about options, order flow, and the impact of options markets on stocks and futures. So again, questions, comments are welcome, and I will be watching the Options-Doug chat channel in Discord and the chat in YouTube. All right, let's get started. So what I want to talk about today is, first of all, economic data, events, and earnings for the rest of the week. And then there was quite a lengthy discussion in Discord over the weekend, and one of the topics that I want to address is a call gamma unwind and put Vanna rally, exactly when to look for those, what they are. And I talked about this last week pretty extensively with the call gamma unwind. It was a pretty bullish week for certain stocks, so that led to the call gamma unwind on Friday. And I'll go over that briefly again. If you have any more questions or interested in that, I urge you to watch my webinar from Friday, and that's in the Bookmap channel on YouTube, and it's in the archive section there. And then I'll talk about our positional analysis for today and then go over some setups. So first of all, the news today. Let's take a look at this economic calendar. So news for today. Coinbase reports earnings after the market closes. And then tomorrow, the big event is the release of the FOMC minutes. Oops, wrong color there. Let me try that again. So the release of the FOMC meeting minutes from the last meeting at 2 p.m. And that is a big event for Wednesday and for the week, really. And then also tomorrow, NVIDIA reports earnings after the market closes. All right, then on Thursday at 8:30 a.m. Eastern Time, economic data comes out, the GDP at 8:30 a.m. Eastern Time, and also after the market closes, Moderna and Block report earnings. And I believe those are both after the market closes on Thursday. And then on Friday, the PCE report comes out at 8:30 a.m. Eastern Time, and then consumer sentiment at 10 a.m. So that's the rest of the week. Economic data, earnings, and events. Okay, so there was again some discussion about put Vanna rally, call gamma unwind, and these are, I guess, really specific setups that I have observed over the, I guess, really the last couple of years. So first of all, the put Vanna rally, I primarily look for that in, or I exclusively look for that in the indices, primarily the S&P 500, SPX, and SPY. And let's think about what traders do with how they trade the index S&P 500 versus single stocks. So the S&P 500, SPY, SPX are really much more complex. There are a variety of traders and they're doing a variety of things. One of the primary uses of SPX, especially for big portfolio managers, money managers, is they will hedge their portfolio. They may have a portfolio with dozens or even several hundred stocks, and they can't buy puts in each of those stocks. So they buy puts in SPX. They beta weight their portfolio, determine the amount of delta that they want to hedge, and then they will buy, calculate the number of SPX puts that they need to buy. And they're typically buying longer term puts. So now they would most likely be buying March expiration puts. That is the next big quarterly expiration. And the put Vanna rally occurs in a couple of circumstances. First of all, around big events like CPI report, FOMC announcement. Traders will want to hedge their portfolios going into that event, and more often than not, well, almost always, volatility is going to drop after the news. There's no more unknown. The news is known, the CPI data is known, and quite often recently has come in as expected or a little bit better than expected, and the market rallies after that, partially because of the build in put gamma, negative gamma. So the way this works, traders are buying puts, traders, money managers, investors buying puts. Market makers sell the puts, and they have to sell futures to hedge their delta exposure. And then after the event, again, implied volatility typically drops. Price may increase. Those puts lose value. Market makers' delta exposure decreases, and they can buy back their short future hedges, and that tends to help to fuel rally after big events. And this also occurs at the major monthly expirations, primarily the February was kind of a minor expiration, but again, we're looking at March as being the next big expiration. And if gamma, put gamma in SPX and or SPY is quite negative, SPY minus 1500, minus 2000, that could potentially lead to a put Vanna rally after expiration. And that was pretty typical of last year with the market moving down quite a bit. So that's a put Vanna rally. index only, and I look at the S&P 500. I trade the S&P 500. All right, a call gamma unwind is something that I look for in single stocks. And the way that works, and I gave several examples last week, for whatever reason, traders are bullish on a stock. They buy calls during the week, and they're buying the calls that expire at the end of the week. They're buying the weeklies, and then as Friday approaches, especially Friday afternoon, those calls, there's a lot out of the money. They quickly start to lose value as time passes, and that's the charm effect, the change in delta as time passes. And so traders have been buying calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. As these calls start to lose value, market makers no longer need their long stock hedges, and they can sell their stock hedges. And in a bullish environment, or at least with bullish stocks, where you know that there's a large amount of gamma expiring on Friday, and then there's call gamma, then that's a pretty reliable strategy. So that's the difference in the two. Put Vanna Rally for the index products, and call gamma unwind for single stocks. Okay, any questions about that? All right, let's take a look at our positional analysis. And we'll go back to the S&P 500. And this is Bookmap. This is the ES, the S&P 500 futures, and just a steady downtrend today. Let's before we dig into that, let's take a look at a larger time frame chart, and this is SPX in a thinkorswim chart, just showing price and levels. And these are this is SPX, this is the Spotgamma levels for today, shown in the red horizontal lines. And this is right now this is the put wall at 3,900, and the key gamma strike has moved it back down to 4,000. So last week, recall that the key gamma strike moved up briefly, but now it's back down at 4,000. And then here's the call wall way up at 4,200. And the levels that are in play for today, we'll take a look at in just a minute in a 1 minute chart. And the thing to note here is the shift in ranges. So there's this trend break here, and then SPX traded in a pretty narrow range most of last week, between 4,100 and 4,150, and then Friday broke down below that and traded for the day in a range between 4,050 and 4,100, and now it looks like that range is broken again, down now to the 4,000 to 4,050 level, trading in that range. All right, so that's the bigger picture, and it appears that again, the trend is broken. Consolidation here in the 4,100 to 4,150 level, and that is broken, and now SPX is moving lower, and so far finding support around the 4,000 level. All right, let's take a look at a shorter time frame. And notice that here, this is, I'll talk about this chart in just a minute, but this is the SPX 4,000 level. This number is not quite correct. It should be a little bit lower. And I'll talk about that in a minute. So let's Now let's take a look at a shorter time frame chart. This is SPX for today, again showing SPX trading in a pretty steady downtrend from 40.50 at the open down toward the 4,000 level. And the 4,000 level was noted as support and the Spotgamma AM Founders Note. All right, so that is just price and levels. Now let's go back to Bookmap. And what I'm showing here, I've got two columns of levels. This is the Spotgamma levels. These are cloud notes that are provided by Spotgamma to subscribers. These are updated automatically every day. And here showing key SPX levels. And the reason I say this number is correct, right now Spotgamma incorrect, is Spotgamma is using a 10-point difference between SPX and SPY, and the number is somewhat less than that. I think around 7 points. I just took a quick look. So this level should be maybe around 3 points lower. So it would show that that level really hasn't been touched yet. So that is the Spotgamma levels. And then I have another column here, these C levels. And these are my cloud notes. And I mark, first of all, the big round numbers in ES. So that's 40.50. And this, I've got two things here. The first is the white is the SPY 400 level. That's the SPY 400 key gamma strike. And that's also the put wall. I'm sorry, that is the put wall. That's not the key gamma strike. My mistake. So that's the 400, SPY 400 put wall. And the LEM, that's the lower edge of the expected move for the week. So the ES has already hit the lower edge of the expected move for the week, and that's based on the options market. So that's these are the levels that are in play. Again, reversal lower around 450, just a few minutes after the open, and steady downtrend down to the SPY 400 put wall and the SPX 4000 key gamma strike level. All right, let me check for questions. So there's a question, so being short puts makes the market maker in a positive gamma, and no, that's not correct. When traders are long puts, market makers are short puts, that is a negative gamma environment. And that means that as price drops, market makers have to sell futures to hedge their delta exposure, and that's typical of a negative gamma environment, and that tends to increase volatility. So again, when market makers are short puts, that's a negative gamma environment. And then Sheena asked, where do you get those levels? And those levels are available for Spotgamma subscribers. So you need a Spotgamma subscription, and I showed Thinkorswim charts with the Spotgamma levels, and that is available daily to Spotgamma subscribers in a script. You have to manually update that every day. And then for Spotgamma subscribers as well, these cloud notes are available. And those are updated automatically. So again, those are made available to Spotgamma subscribers. All right, so those are the levels in play. Then let's talk about shifts in levels. And for the SPX and SPY, volatility triggers dropped for both SPX and SPY. SPX dropped from 40.95 last Friday to 40.55 today, and SPY volatility trigger dropped from 408 to 406. And the volatility trigger is Spotgamma's proprietary gamma flip level, and below that level, that means that market makers are positioned in the negative portion of the gamma curve. And again, that just means what I just talked about. They have to sell futures to hedge their delta exposure, and both the SPX and SPY are trading below their volatility triggers. And also for SPX, the put wall dropped down from 40.50 to 3900, and then the key gamma strike, as I mentioned before, dropped down from 4100 to 4000. So for SPX, back down to familiar levels. And then for QQQ, the put wall dropped from 300 to 290. All right, let's take a look at the S&P 500 gamma charts now and see where those levels come from. So this is, excuse me, this is the SPX, the absolute gamma levels, and this is the 0 level. So above this horizontal line, that's positive gamma shown by the black bars, and below that line, that's call gamma. Below that line, that's negative gamma or put gamma shown by the teal bars. So it's pretty clear that the 4000 strike is the key gamma strike. That's the strike with the largest absolute gamma. 3900 is the put wall, and that's the strike with the largest net negative gamma, and that can be expected to act as support. And then here's the call wall at 4200. That's the strike with the largest net positive gamma, and that can be expected to act as resistance. And that is pretty far away. That's pretty far out of play right now, and it looks like the the range from probably 3900 to potentially 4100 is in play. So that is the SPX gamma, absolute gamma levels. Let's take a look at SPY. I'm going to zoom in on this. All right, so for SPY, 410 is the key gamma strike with the largest absolute gamma. There's 400, that's the put wall, that's pretty obvious. The strike with the largest net negative gamma. And then the call wall is up at 4200. So it looks like to me that the gamma has started to shift down, and there's potentially somewhat of a tone change in the market here, with gamma shifting down, really for right now concentrated in the 400 to 415 level. So we'll keep an eye on that this week and see if gamma shifts to more negative, more put gamma, and that shifts down. All right, let's take a look. So that's the SPX and SPY. Let's take a look at the NASDAQ. This is absolute gamma levels, and we'll look at QQQ. So for QQQ, 300 is the key gamma strike. 290 is the put wall. Again, remember that shifted down from 300 on Friday, and then 310 is the call wall. So call gamma concentrated above the 300 level, and then put gamma concentrated below. All right, so overall to me this looks like a starting to be potentially a shift from a lot of call gamma above to put gamma below. So a build in put gamma. And in YouTube, Sheena asked, the red levels on the TOS charts are from Spotgamma. Yes. So Spotgamma provides their levels to subscribers for a variety of platforms. And I use Bookmap and Thinkorswim, and they provide levels for both of those platforms, with Bookmap being updated automatically, and Thinkorswim requires some manual work every day to get those levels on the charts. Just basically copying the script and pasting it in, replacing your older script with a new script for the day. All right, so those are the gamma charts. Let's take a look at the data now. And there's a question in Discord. I'll get to that in just a minute. Let's take a look at the data. So this is gamma notional. This is market maker's position on the gamma curve. SPX is shown in the left column, SPY shown in the middle column, and QQQ on the right. And again, this is market maker's position on the gamma curve. It's negative for all three instruments, and shifted actually slightly positive today from Friday. And I compare morning to morning. So SPX on Friday was minus 254, and today it's minus 82. And remember, Friday was expiration, so there are going to be some shifts in levels, and traders will start to build up March positions now. So SPX shifted from minus 254 to minus 82. SPY shifted from minus 1487 to minus 1304. And QQQ shifted from minus 3, actually shifted more negative. So SPX and SPY shifted to a little bit less negative, and then QQQ shifted more negative from minus 345 to minus 377. So in all three cases, the market maker's position on the gamma curve is negative, again meaning that traders are long puts, market makers are short puts, and they have to sell futures as price decreases to hedge their delta exposure, and if price increases they can buy back their short futures. So they're trading with price in this negative gamma environment. All right, let's take a look at the Vanna charts now, and these charts illustrate graphically what I was just talking about. So this is SPX, and this chart is showing how market makers delta notional shifts with changes in price. So their delta notional is shown on the vertical axis, the strike price is shown on the horizontal axis, and the green curve shows how their delta notional changes with changes in price and implied volatility, and that's the Vanna effect, the change in delta with a change in implied volatility. And so this is showing exactly what I was just talking about. As price decreases, market makers' delta notional increases, and they have to sell futures to hedge their delta exposure. All right, so that's SPX. And there was just, this is just showing the slight shift from Friday. Here's SPY. Same thing, negative gamma, slight shift from Friday, and QQQ to slightly more negative. Okay, so I'm doing all this. This is my positional analysis, my planning and preparation for the morning. And the last thing that I want to look at, so I focused on primarily on the indices here, the S&P 500 and a little bit of the QQQ. And one thing that I keep track of every day is the key gamma strike for all the stocks on my watch list. And I compare the current key gamma strike, that's the key gamma strike for today, with the key gamma strike from the previous day, and that's shown in the right column, and then the current key gamma strike is shown in the D column there. And note that on Friday all the shifts lower in the key gamma strike, and that was a good alignment with the call gamma unwind thesis for the day. So that was an added confluence or an indication to look for short, and then that has continued today with more. The only stock with a rising key gamma strike was Disney. For all others, for the others shown here in red, the key gamma strike dropped. So given all that, the drops in the key gamma strikes in the stocks here, as well as the shift lower in the volatility triggers for SPX and SPY, and then the shift lower in the put wall for SPX and the key gamma strike for SPX, and what appears to be a shift lower in put gamma, as well as just looking at the SPX chart and seeing those levels broken, my thesis for the day was bearish. Okay, so there's a question in Discord. What are the consequences exactly when next expiration gamma is 83% high on a stock in Equity Hub? So first of all, I ask you to tell me which stock you're looking at, and we can take a look at that stock. So I talked about this on Friday. So I look at several things. First of all, I sort my watch list by the next expiration gamma percent. Do you mean Tesla or TSLS? Is that a typo or is that a stock? Yeah, sorry, I'm not familiar with that stock. We'll take a look at it in just a moment. So I sort my watch list by next gamma expiring. Then I'll go through an Equity Hub. Oh, that's inverse Tesla. Okay. So that'll be interesting. We'll take a look at that in just a moment. So I sort my watch list. Let's just go ahead and take a look at Equity Hub. And now this is not really going to apply on Monday. We'll do this on Friday in a bullish week. And so far it appears that this may not be a setup strategy that we want to look at for this week if the market continues down like it is today. So anyway, I sort my watch list by this next expiry gamma percent. Then I look for, here's Snowflake. So the Friday expiration is 224. So I would look for larger than 30% here expiring this week, and then I would come down here and I would look for some green in this region here. I want to see some indication of call dominance in part of this chart. So we can look at, so the call dominance really doesn't start until above 200. So, you know, it's too soon to tell, Um, but that's my process. That's what I look for. So let's go to the stock, the TSLS. All right, I would not touch the stock with options at least, or I would not base um, any strategy on options on this stock for a couple of reasons. First, primary reason is there uh, doesn't appear to be much options activity. So I'm looking at the very light shade of pink in this curve, and this is indicating that there's not much options activity. Here's the position size shown in this right column. Let me redraw that. I don't know what that is. All right, so that's the first thing. I look at a very light shade of pink, not much options activity, and then also I'm looking at this line right here, this outline. All right, excuse me just a minute. Okay. So I'm looking at this line right here, and it's just very light, showing very low recent activity. So I wouldn't make much of anything of the stock. All right, let's move on now, and let's take a look at some setups. All right, so the first thing, actually, oops, I don't know why Chrome is resetting. So this is my watch list, and let's take a look at something that's pretty interesting today, is the divergence in the hero signal between SPX and SPY. Notice what I'm looking at is this right here, the notice this very weak hero signal for SPX and the very strong hero signal for SPY. Kind of an unusual divergence here. And so let's take a look at SPY now. And notice that for most of the day, the divergence in hero showing traders were taking positive delta positions, and price continues lower. And then SPX, much more of a confluence with options trades and price action, order flow. I'm going to zoom in on this, and what I can do, first of all, actually let's stick with the total and look at next expiry. And I don't know why that's chopped off there. So what I saw this morning, we'll take a look at, this is the next expiry, puts and calls. This may be a little bit confusing, but in the morning especially, what I noticed was this light blue line especially, this is the 0 DTE options, seem to be driving order flow. All right, let's clean this up a bit. Get rid of the 0 DDE. So that's SPX. Overall, Hero, there's some bumps here, but Hero trending lower, SPX options trades driving price action. All right, let's take a look. So let's go back to Bookmap now. And there's order flow confirming price, the hedging flow in SPX, which what seems to be driving today, and just the steady downtrend now. And price has broken both the SPY 400 put wall level and the SPX 4000 level. And it looks like, at least for a while today, some big traders were fading the move. This is shown by this light blue line, iceberg orders. Large traders were in there buying with their iceberg orders. They use those to hide their size, and you can see the large iceberg orders down until this line levels off. And meanwhile, this yellow line showing stop orders has been bearish all day. That's showing sell stop orders, and I have found that that is usually a good price confirmation. Price usually moves in the direction of the stop orders. So price action is, order flow is confirming, at least as far as the stops and the trend, CVD confirming the what the options market for SPX is showing. All right, let's take a look at a few stocks now, a few setups. So this is the S&P 500. Let's just go back to Hero now. And again, sometimes you just have to investigate here. Look at SPX and SPY. And let's see if we'll search for the SPX plus SPY. That's the combined signal. And at least starting around 1 p.m. is showing a stronger confluence with hedging flow and price action. But I think the key for today for S&P 500 traders was to look at this SPX, and then again I think primarily to watch what the 0 DTE traders were doing. And that's shown by this green or teal line. All right, let's take a look at some stocks now. And I'm going to take a look at Microsoft first. End of the morning, there was a very strong confluence between price action and hedging flow. An interesting move right here at just before 9:45. Let's just see what traders were doing. So they came in and they were pretty aggressively buying calls. That's shown by the rising orange line, and then selling puts, and then that quickly reversed. They started selling calls and price reversed lower. All right, let's go take a look at Bookmap. We'll take a look at Microsoft. And I'm going to zoom in so we can see this more closely. Go into about right here. And here's that reversal. This is showing at around 9:45. So we know that traders were buying calls pretty aggressively, driving this price up to the 255 put wall. That's the 255 put wall, hedge wall, and see these small green dots, or red dots, I'm sorry, red dots. That is a sell sweep. So those buyers were met with aggressive sellers, and then price reversed lower and did a retest of the 255 level, and then has been gradually moving lower. And it looked like this 250 key gamma strike, that's the 250 key gamma strike and key delta strike was a target, was in play, and may still be, but it looks like price has reversed around the 252 level. Let's go back and take a look at Hero and see what traders are doing. Oops. So traders started taking positive delta positions around 11:45, something like that. Oops, got the wrong tool there. Let's get the arrow. Traders started taking positive delta positions, and then price started moving higher about a half an hour later. So a little bit of a divergence short setup in the morning, and then a slight divergence long setup. All right, so that's Microsoft. Let's take a look at NVIDIA now. And remember, NVIDIA has been market leadership and is moving lower today. There's a strong confirmation with price action and options trades hedging flow. And traders are selling calls and buying puts. Let's take a look at Bookmap. And the dip buyers were in early in the morning, and that didn't last long. Notice all the aggressive sellers coming in here as price jumped sharply, and that's shown by the pink dots there, and then price it reversed very quickly to 210 and now continues lower. Let's just see what sort of target is down below. And there's the 205 hedge wall, and that may very well be in play today. All right, so there's one of the market leaders, definitely in a downtrend today, moving lower. And let's take a look at QQQ. And here, this is showing a buy sweep up toward the 299 level, and then note the shift from green dots in that final buy sweep to pink dots. Right here, and price moves lower. And let's take a look at Hero. See what options traders were doing. So clear confirmation with NVIDIA, and pretty much the same for QQQ. And this is clearly showing that traders were buying puts, and there's a slight divergence. Traders started buying puts, and just maybe about 5 minutes later, price starts to respond lower. Let's go back and take a look at Bookmap. So traders continued to buy calls, but it looks like, again, puts are driving. Let's go back and take a look at Bookmap. So we know that around 9:40, traders started buying puts, stopped selling puts and started buying puts. And in Bookmap, we can see that final sweep, buy sweep, around 9:45. And then again, the aggressive sellers come in as traders were buying puts. All right, let's take a look at Tesla. And notice the very, very bearish order flow, all the pink dots. So a pretty similar pattern to some other stocks that we've looked at. This quick jump up, aggressive sellers come in right here at around 209, and the whole time cumulative volume delta just from a few minutes after the open has been bearish, and very few green dots in there, volume dots, showing aggressive sellers, market sell orders. First target was the 200 key gamma strike, shown here, and the liquidity at that level. Price bounced off that level and now has broken through that level. So there's your one of your other key market leaders, Tesla, and a downtrend as well today. All right, I've got a few minutes left. Let me check for questions. So Persian Lion says 399 was NVPOC, some sort of point of control. I will tell you, Persian Lion, in this channel, we don't look at that stuff. That is, other than the session volume profile here today, I don't look at that. That's arbitrary, and I look at gamma levels, liquidity, and round number levels, which are often all the same levels. So again, if you want to focus on that, that may be the something that you want to take to another channel. So here we're focused on a new way of looking at markets that's based on options and positional analysis and the key gamma levels and liquidity in Bookmap. Okay, so let's go back. We have a few minutes left, and there were a few other stocks that we can take a look at. First of all, let's go to Amazon. Another steady downtrend, more chop in the open. Let's go take a look at Hero. And pretty strong confirmation between hedging flow and price action. And pretty choppy action in Hero, but definitely negative delta, bearish overall. Let's go back and take a look at Bookmap. And I'd say pretty bearish order flow altogether. Notice the sell sweep here, these small bright red dots. Price makes a series of lower highs and tests the key delta strike and is continuing lower. Not a lot of range in Amazon today. Definitely better trades in the S&P 500, Nvidia, Tesla, Microsoft, some of the higher price stocks, higher beta stocks. And let's go back and take a look at Hero now. So some other stocks that I saw this morning, Coinbase, and showing a pretty typical strong correlation between options trades, hedging flow, and price action in Coinbase. And again, remember Coinbase reports earnings after the close. Let's see how traders are positioning themselves. So they are buying puts. That's shown by the following blue line. So that's Coinbase, IWM, and this morning there was a strong correlation after this jump up between hedging flow and price action. Moderna, very strong correlation between hedging flow and price action. And remember, Moderna reports earnings on Thursday. And that was all I have. Let's go back and check the S&P 500 again. Now it looks like hedging flow for SPY has shifted positive again. Let's zoom in on this. So traders continue to buy calls. Let's take a look at a shorter look back period, 30 minutes. So looking at just the last 30 minutes of hedging flow, this is showing that traders are starting to sell puts, at least temporarily, and buy calls. We'll take a look at SPX also, and then we'll end up by looking at Bookmap. Look at ES one last time. So overall for SPX, the hedging flow continues to be bearish, negative delta. Let's wrap up by looking at ES and Bookmap. All right, so still continues to be in a downtrend. As Bruce says, no reason to assume otherwise until that it does. You do see a shift. So still, still in a downtrend. Nothing has really changed. Let's see what's down below, and it should be actually pretty clear sailing. No levels down below until the put wall at 3,900. At least on here, we can take a quick look at the gamma levels again. S&P 500. So there's some gamma at 39.50 put gamma, but not a lot. So here's what's down below, 39.50 and 3900. Okay, any final questions? All right, I'm going to wrap it up. That's all I have for today. And I want to thank you for your questions and comments. And thanks for watching, and I will see you tomorrow. Thanks again. Bye.